Thank you for joining us this evening. You're watching Squawk. I'm Bruce Whitfield on CNBC Africa, first in BusinessNet Worldwide. In the next 30 minutes, we dig into the latest financial news and market stories. And joining me on the hot desk, David Shapiro from Sasfin and Mike Horwath from Applied Capital Insights. It's good to see you both. I've got to talk to David first because otherwise he gets upset, Mike. You've been in New York, you've been in the Big Apple, the financial center of the world's global capital city of money. How are they feeling in New York?
Still angry and still split. I think that if you sit down at a table with friends and family and begin to discuss the fiscal cliff or the issues that are driving the American population at the moment, the vocal points of their discussions, the politics, people are very angry, very, very angry with politicians and also split in their views. If you believe that Obama was on the right track, I promise you the person sitting next to you will tell you he is not, and you'll enter into arguments which actually become very heated. And that's how the population is at the moment. No one believes that Obama has control of the Democrats and nor that Boehner has control of the Republicans. That's how different it is. That's how difficult it is. So I think we're in for not only 2 months, 3 months, 6 months of very, very difficult times in the United States. I think it's an inauguration on Monday or Tuesday. I thought that they'd give him time out for that. Not at all, I think. And it's also going to impede on his ability to actually implement a lot of the things that he promised in the build-up to the election.
And Barack Obama's already appealing to Americans to allow them to raise the debt ceiling. They're not being productive enough. They're not being efficient enough in the way in which they're running their own country. So what they're going to do? Borrow more money in order to do so.
They are. And the Republicans are saying, we can't keep doing this. He's saying, don't leverage the debt ceiling on the back of budget cuts. He's saying they're two separate decisions. So there's a lot of acrimony, and even within your own firm, within your own circle, you will fight.
It's an interesting one. How does that fight affect us then, Mike, from your perspective?
I think it creates a lot of uncertainty. The sequester is still very much in play until the end of February. We've got the debt ceiling whole argument. We were already there at the end of the year. So through all sorts of financial manipulations have been able to push it out. And I really do think the rating agencies are watching this very carefully. I wouldn't be at all surprised, and Bernanke has certainly suggested that they actually better watch it a little bit because the rating agencies could actually ratchet them down another notch.
We think that the Americans have got problems. We've got far bigger problems domestically, Dave, because we've got the global situation, which was beginning to look better toward the end of 2012, and we're beginning to say, well, we can ride off the back of a stronger global sentiment, even if South Africa is feeling a bit wobbly. But now we've had South Africa hitting its own wobbles in 2013 on top of what's happening internationally.
I think South Africa is more of a problem than international. I was going to qualify what I said previously by saying that despite arguments, a lot of talk about the developments in Louisiana over the development of natural gas and also buildings coming back very strong. So that seems to be offsetting worries about the budget cuts and so on. So I'm happy with America, and I'm still quite confident of going into America and buying selected shares. China also, we're starting to see very positive signals coming out there. When Mario Draghi tells you that the debt markets appear to be stabilizing, he's not saying that. I'm happy with that, and I can go in and buy. South Africa is a different story, and I'm very concerned about the political and economic ramifications of what we're seeing, number one, on the mines, and also generally in the economy, manufacturing and so on.
Okay, let's talk. Mangaung happens. Mangaung, the big ANC conference, happens in Bloemfontein, otherwise known as Mangaung, the most mangled word by foreigners in South Africa during 2012. And there is this Ramaphosa relief that comes in. Everybody gets an early Christmas present. Cyril Ramaphosa, a knight on a white horse, is coming in to rescue the country. The realities, however, Mike, we started off 2013 in Anglo Platinum, which for the last 12 months has been warning us that it's conducting a massive review of its operations in South Africa, comes out with the reality of that review. And there's this widespread revulsion and retching sound which comes from various quarters of the economy.
To me, Bruce, there's one really just simple philosophy in all of it. You can choose your actions, but you can't choose the consequences. And the entitlement kind of approach means that I can do anything, and there's no consequences, and government will actually come and back me up. And you just say to yourself, but wait a minute, for me, if you look at business, it is the key economic driver in any economy, not just in South Africa. And the point I really want to make here is that business creates product, it creates trade, it creates jobs, and it creates fixed investment. And all of that gets taxed, whether it's customs duties, VAT, personal tax, company tax, royalties, you name it. And then the revenues they get from that, they can then allocate according to their own political imperatives. But the fact of the matter is they need business. And if Labour and government can continue to whip business like this, particularly the big capital intensive stuff, you then say to yourself, this is actually very dangerous, because what comes out of it is our companies need to satisfy their stakeholders, otherwise their share price won't go up. So what are they doing? They're actually moving out of the country. What does that do? It takes trade, it takes skills, it takes fixed investment, and it takes taxes, and it probably takes dividends because they reinvest them. So all of that goes out of the country, and it doesn't happen here. And that's exactly what we're seeing in the numbers. And of course business is going to turn around and say, you know what, we're not going to fight you. If you don't like us, we'll just go somewhere else.
But that's the scary reality that we're starting 2013 with.
It's a silent movement. It's happening without noise. Businessmen prefer to hold back, otherwise they get this Anglos type situation where fiery government comes on top of them and starts accusing them of virtually treason. So they do it quietly.
Yeah, I think to be fair to Susan Shabangu, who's been quite hysterical in her response to Anglo Platinum's announcements, that Anglo Platinum could have played it more cleverly. They could have played the politics a bit more cleverly. I think they blundered a little bit when it came to the way in which they dealt with the Department of Minerals. They could have been a little bit smarter, saying, look, here's the harsh reality, this is what we're going to announce, and then announced it, not announced it and then said, here's the harsh reality.
Maybe history's forced them into that position. Where in the past they've tried it, they found obstacles. But, and this is where a smart department, I knew about it. I've known for months and months that this was coming. Now, if I was the minister, I would start making inquiries, get my CIA or my FBI to start finding what are they going to do, where is this heading. Analysts, we try look for it so that we can position our investments accordingly. They should be doing it.
All you had to do was watch television, listen to the radio, read your newspapers. It was pretty apparent that something pretty drastic was going to happen. The reality is, though, that there was a big cutback at Anglo American Platinum in 2009, 2010, where almost as many jobs were cut. Now, this is a company a third of the size in terms of its workforce, and it's a country that's bleeding in terms of jobs. The ANC has promised jobs, and it's going to be emotional when it comes to its response on big business, which is apparently willy-nilly cutting jobs without considering alternatives.
But it has to, because you've got to survive. That was the whole European situation. If you understand what happened to Europe, it was easy while we had global growth. Soon as the tide went out, as Warren Buffett would say, we saw who was swimming naked. Yeah. And Greece was caught naked, Spain was caught naked, and we're being caught naked here.
So Anglo American Platinum has fallen from over 500 Rand a share after a really strong December rally to 450 Rand or thereabouts. A lot of that is political noise. Do we buy Amplats at 450 bucks?
Ask Mark.
Mark.
He's stunned.
No, I wouldn't.
You wouldn't. Where would you buy Anglo American Platinum?
Yeah, I'd buy platinum.
Buy platinum, but physical platinum?
Through an ETF, but I wouldn't buy the companies. One of the essential, and to me what's been fascinating about the rotation that we've seen, which was quite aggressive, and then everyone suddenly coughed and spluttered and wondered whether they were doing the right thing, was that when you buy a commodity or a resource stock, what are you actually buying?
Yeah.
You're taking a big risk anyway, and you're buying operational gearing. So you've got to have a couple of things going for you. Your production volumes have got to be rising fairly strongly. You've got to have a commodity price that's now rising. You've got to probably have a rand that's helping you as well. So your turnover is now going up like that, and you've got to have costs that are being contained. We have production volumes that are going like that. We have commodity prices, platinum's going like that. The rand's not really going anywhere in particular. So you're not getting your revenue growth that you think you should be getting, and your costs are suddenly doing this. So in fact, actually, your operational gearing is getting squashed and not expanding. So I think the rotation, this generalized rotation, is extremely dangerous. I think you need to be very, very specific about where you're going when you're rotating. It's not a general rotation at all.
No. All right. So
I think it's, and I'm in tune with what Mark's saying, but I think that if you're a trader, and I'm talking trading now, not necessarily, because investing, when you invest in the longer term, you have to consider what Mark's saying.
Correct.
But I think from a trading point of view, I think you're buying an option on platinum, and because the operation, if the platinum price does go up, if we do see a kick in Europe,
you remove production. If demand picks up around the world, you then sit with a platinum shortfall, which is great for the price of the metal.
So you can buy, if you want to buy options on platinum, or even buy these.
We'll talk more about that in just a second. There have been a bunch of other announcements out this week. Probably the announcement that shocked the market almost as much as the platinum announcement, bizarrely, was ShopRite's trading update, which came out and said, look, our sales are fine, but they're not that great. And everybody went into a funk over everything from furniture to clothing to food retail. What on earth was that about, Mike?
Valuations.
Valuations have been high and stupid for a long time. Why does it take a ShopRite trading update to push down the price of Foschini Group?
Well, these things don't matter until they matter. And so, as long as the resource side didn't show any life, there was nothing to rotate into, really.
Yeah.
So the momentum story was the strong story. Now and everyone knew that the valuations were strong. Now what we're finding, if you look at your personal disposable income in real terms, the latest SAR bulletin was showing it's 2.6%. So it slowed right down from 6 to 7% a year and a half ago to 2.6. So you say to yourself, without the jobs and without the credit, you're going to slow. Now the question is, do you justify the very high value multiples with slowing growth? Now, in the absence of any resource excitement, yes. But when all of a sudden some resources start to get excited, then all of it, and I don't think that the valuations are going to go back. I do think this is a secular adjustment in value. It doesn't mean to say there's anything wrong with the companies at all. They're actually going great.
They were just massively expensive.
It wasn't a bad result.
No, it wasn't.
It wasn't a bad result. And outside of South Africa, they're growing at 28%. But if you want to hold on to your 30 PE, you better give us 30% growth.
Yeah.
That's it.
Yeah.
If you're going to give us 12% growth, we're going to hurt you.
Yeah.
Just on that point, this is where the vulnerability lies in the market, and we can't read it. Whether it's Mark, whether it's me, whether it's anybody else. Because last year, South African retailers were the flavor of the month. In fact, the flavor of the year.
Yeah.
Massive amounts of foreign investment came into that and pushed them up to levels that we hadn't seen. We can't read their mind. We can't read how they're going to react. But if they do decide to pull out, then we're going to have an almighty smash in the share price. Regardless of whether they're coming out with 12, 13, 14% growth in that, it's just going to be a flood of money coming out. That's what we're tussling with
ShopRite
at the
has got
moment.
one shareholder, one fund that has got 20% of ShopRite.
That's dangerous.
It is. It's very dangerous.